Fly Leasing reports Q1 2021 net loss of $3.4 million. In the quarter, Fly's revenues and net income were again adversely impacted by the global pandemic. Fly Leasing signed merger agreement to be acquired by Carlyle Aviation. Fly Leasing reported total revenues of $80.9 million in Q1 2021 at March 31, 2021. Fly's total assets were $3.1 billion. Fly Leasing Limited, a global aircraft leasing company, today announced its financial results for the first quarter of 2021. Highlights. Signed merger agreement to be acquired by Carlyle Aviation for $17.05 per share. Total revenues of $80.9 million. Net loss of $3.4 million, 11 cents per share. Unrestricted cash and cash equivalents of $117.2 million, $157 million. Net book value of unencumbered assets. The pending acquisition of Fly Leasing by an affiliate of Carlyle Aviation Partners is on track and is expected to close in the third quarter, said Colm Barrington, CEO of Fly. We believe that this transaction represents strong value for Fly shareholders, with the per-share cash consideration representing a premium of nearly 30% to Fly's closing price on March 26, 2021, the last trading day prior to the merger announcement. In the quarter, Fly's revenues and net income were again adversely impacted by the global pandemic, added Barrington. While we are seeing improvements in some sectors of the global airline industry, particularly in U.S. and Chinese domestic traffic, there are still large parts of the world where COVID-19 is surging and both domestic and international air traffic is at a virtual standstill due to continuing travel restrictions. It now appears likely that it will be well into 2022 before global air traffic returns towards 2019 levels. Financial results. Fly is reporting a net loss of $3.4 million, or 11 cents per share, for the first quarter of 2021. This compares to net income of $38.1 million, or $1.24 per share, for the same period in 2020. During the first quarter of 2021, Fly recognized $5.9 million of costs associated with the pending transaction with Carlyle Aviation. Adjusted net income loss. Adjusted net loss was $1.4 million for the first quarter of 2021, compared to adjusted net income of $43.6 million for the same period in the previous year. On a per-share basis, adjusted net loss was 4 cents in the first quarter of 2021, compared to adjusted net income of $1.42 for the first quarter of 2020. Financial position. At March 31, 2021, Fly's total assets were $3.1 billion, including investment in flight equipment totaling $2.8 billion. Total cash at March 31, 2021 was $151.2 million, of which $117.2 million was unrestricted. At March 31, 2021, Fly's net debt-to-equity ratio was 2.2x, reduced from 2.3x as of December 31, 2020. Merger. Fly announced on March 29, 2021 that it had entered into a definitive agreement to be acquired by an affiliate of Carlyle Aviation Partners, Carlyle Aviation, the commercial aviation investment and servicing arm within the Carlyle Group's $56 billion global credit platform. Under the terms of the merger agreement, Fly shareholders will receive $17.05 per share in cash, representing a total equity valuation of approximately $520 million. The total enterprise value of the transaction is approximately $2.36 billion. The transaction is expected to close in the third quarter of 2021 and is subject to customary closing conditions, including applicable regulatory clearance and the approval of Fly's shareholders. Given the pending transaction, Fly will not host a first-quarter earnings call. Aircraft portfolio. At March 31, 2021, Fly had 84 aircraft and 7 engines in its portfolio. Fly's aircraft and engines are on lease to 36 airlines in 22 countries. Portfolio at March 31, 2021 December 31, 2020 Number percent of net book value Number percent of net book value Airbus A320 CEO family 32.28% 32.28% Airbus A320 Neo family 12% 12% Airbus A330 2% 32% Boeing 737 NG 40 39% 40 39% Boeing 737 MAX 23% 23% Boeing 777 LRF 211%, Boeing 787 415%, 415% total 184 100%, 84,100%. 1 includes 6 aircraft classified as held for sale as of March 31, 2021. No aircraft were classified as held for sale as of December 31, 2020. At March 31, 2021, the average age of the portfolio, weighted by net book value of each aircraft and engine, was 8.6 years. The average remaining lease term was 4.7 years, also weighted by net book value.